Welcome everyone. Hello, hello. So welcome to the Case I3 speaker series. Many of you may know that our impact investing initiative has a speaker series, which we've had now for the past 3 years, and I'm really pleased to welcome our 6th Case I3 speaker. We invite speakers twice a year to come talk to the community. And spend an evening with our faculty, staff, and students to get to know us and for us to get to know them. And so tonight we have Michael Dorsey, who is co-founder of the Bay Area Equity Fund and the Bay Area Growth Fund and former partner of the Wesley Group. Mike is a venture capitalist who had a 20-year tenure as an investment banker, including at JP Morgan, and then turned into a serial co-founder of several highly successful impact investing funds. Did I make you laugh already?
Yes, but I'll explain it later.
Okay, good. He'll correct me later.
No, it's accurate. It is accurate.
What's unique about Mike? I'm going to give you a few words and you'll get the picture. Tesla Motors, SolarCity, Pandora. You guys heard of these before, perhaps? So these are all investments that Mike has made in some pretty well-known companies. You may not know that these companies are not just doing well financially, but they're also having significant environmental and community impact. He's worked with each of these companies to help them find ways to build shared value, building on their business interests, to incorporate deeper connections with the communities that they work in, and to drive bottom line growth at the same time. I interviewed Mike earlier today to get some clips for the Case website. And we had a fascinating discussion about the growth and future of impact investing, about what he sees as essential skills and opportunities for MBAs, and the opportunity for large-scale investors to get behind the impulse to build long-term value. So I know it's going to be an exciting discussion tonight. He has served on our Case I3 advisory board since its inception, for which we are grateful. He also has several grown children, and he proudly told me today that 2 of them are social entrepreneurs. He serves on several local nonprofit boards in Silicon Valley, where he's based. And I can also tell you that he has a great sense of humor, because I don't think I've laughed that much over lunch in a very long time.
Good.
I know he wants to make this session engaging, so he wants you to jump in and interrupt and have a discussion. So please don't let me down on that. Don't be shy. And please join me in welcoming Mike Dorsey.
Thank you very much, Kathy, and it is a great pleasure for me to be here to talk about a subject that I love, and I hope that I can add something to your understanding of it. I think that I have I believe, practical approach to it, having done it for now 12 years. And having said that, I very much appreciate academic approaches to impact investing as well, because this is my new favorite book. I just finished this as soon as I got it, I will say, and learned a lot from it, in all honesty. Some of which I'm going to try to talk about today. And this is my new second favorite book, which I understand some of you may have taken in Dan, I forgot Dan's last name, Vermeer's class. He told me anyway that he taught this. And about a third of, jumping ahead, but I'll back up, about a third of what I hope to do in this fund that I'm now raising is identically this. It certainly is clean tech and resource efficiency, mostly energy and water, but I think that this states very well the case for big financial as well as social returns, which to me is one of the key definitions of impact investing. But the most important thing is to say congratulations for being selected the #1 business school. Seriously, that is just wonderful. To you all. And lastly, before I get into the slides, the last slide says that I think this is all about entrepreneurship for entrepreneurs, because what I've loved about my career, both investment banking and venture capital, is I've worked with entrepreneurs who are some of the most stimulating people that one can be around. Not always the easiest, but there's a bit of a trade-off. It's more fun to be with stimulating, challenging people, I think, than the easiest people to be with. And by being an impact investor, you have the obligation and the opportunity to be different and to create a new way of thinking, a new way of investing, and a new way of being in the world. And a phrase which I'll mention because I thought it was so brilliant that I got from this book was multilingual. And as I understand, there's a new interpretation of that, which is tri-sector leadership. And I think that may be well, it's one of the most important lessons. There's several important lessons. But I think to be a successful impact investor, you have to be committed to and somewhat skilled at tri-sector leadership. And so now I'll tell you more about my experience, anyway, in impact investing and practice. And as Kathy said, I'm going to be very disappointed if no one interrupts or objects. Very disappointed. So this is probably the most common definition of impact investing, which is that it involves intentionality. And I won't go into that. And impact investments are, unlike grants, as you know, are intended to generate a financial return. The only area in which I consider myself at all expert is market rate of return venture capital, because that's all I've done. I don't think that's the only valid part of impact investing at all. And what I've learned from many people in Silicon Valley that I've interacted with is they feel that there is a bright future for a non-market rate of return impact investing, as long as the tools that measure the social return can be improved from where they currently are. They don't think that they're sufficient for them to argue to their, generally speaking, ultra-high net worth client base that they can do a valid assessment of financial plus social return to get to blended. But I'm sorry I'm digressing, but I think that's important. And impact evaluation is, of course, very, very important. And through IRIS and other programs, we now have a couple of standard ways to do impact evaluation. In my first fund, we made it up ourselves, actually mostly at the direction of the Ford Foundation and a couple of other foundations. It was mostly related to job creation, entry-level job creation, wages, living wage, benefits, mostly healthcare, career progression, financial literacy training programs, and English as a second language training programs, and as well as we suggested/required that all companies seek green business certification, which all were happy to do and all saved money from doing. So, Walmart has become famous for saving a lot of money by being more environmentally sensitive than they were a few years ago. So that works with 5 and 10 and 50-person companies as well. As you know, that I just started to talk about this ahead of time. There's a spectrum of impact investing, whether it's the negative screens, which many socially responsible public stock funds do, social enterprise investing, where portfolio companies focus on guaranteeing social returns with possibly less focus on financial returns. There's catalytic impact, which generally, in my mind, are riskier strategies that prime the pump and therefore can be called catalytic in making change. And then there's double bottom line investing, which is the type that I have done and think I'm the only one I think I'm qualified to talk about, which is market rate financial returns. And all of the investments that I have made and intend to make are in companies where the management team and co-owners are impact committed. In other words, as committed to the social impact we're trying to achieve as to the financial returns. This is a little bit about me, and I guess what may be interesting is that I have been interested in the notion of improving the world through business since I went to Yale School of Organization Management. That's the reason I went to that school. At the time, anyway, it was distinguished as being maybe the only one that explicitly focused on public and private management. It has a lot of high-quality company these days, but that's the reason I chose it, because I didn't think that pursuing business per se was really an adequate motivation for a business career, because I thought it was necessary to try to directly work to improve the world at the same time. And I suppose that I thought that because my father worked for the United Way his whole career, and that's one of the reasons I thought it anyway. And that's what, to me, is so great about this, because I think it is a way to materially improve the world through business. And if I want to be controversial, I will even say, I think that it's possible that SolarCity and Tesla have done more to improve the environment than any not-for-profit environmental group I can think of. Of course, those who invested made a lot of money along the way too, so I think it's twice as good. Anyway, some of my activities. Now, this is the financial, if you will, meat of the activity of our first fund, the Bay Area Equity Fund. And I'm sure you recognize some of these companies. And you may not recognize Powerlight, which was acquired by SunPower in 2007. Their expertise was in trackers and lower cost racking systems for PV modules. And that acquisition dramatically increased the growth rate of SunPower. And LabSite is a really interesting lab instrumentation company that moves little substances in the lab with sound waves, because if you touch them with a pipette or something, it recharacterizes them, and therefore you can't evaluate them. So the sound waves move it, and that is installed now. Yes?
How was Pandora an impact investment?
Pandora was an impact investment because it is based in downtown Oakland, and the theory of our impact investing is that a play space is very important, as well as the mission of the investment. So downtown Oakland is a low and moderate income community, and in addition, most of the musicians who worked there, interestingly, they have a lot of PhDs, because the Music Genome Project, which gave rise to the product, is a very sophisticated undertaking. Most of the employees, including PhDs, volunteered and still do, in the Oakland Public Schools teaching music, where it hadn't been taught for 50 years. So I would assert that any company that is located in or even near a low and moderate income community that engages with the community for the benefit of it is an impact investment.
I think you got that question before.
That's true. That is true, but it's still a good question. Yeah. Yes.
You mentioned double bottom line.
Yes.
I've heard a lot about triple bottom line.
Yes.
So I was wondering if in your mind you just put environmental and, how do you categorize double versus triple?
I don't know the answer. I think either categorization is fine.
But you
Double.
keep people and planet together and as one, in the kind of the impact piece, and then the other piece is the financial. Is that
Yes,
what you do? Okay.
yes, financial and everything else is the way one could say double, or it could be financial and social and environmental
Right.
is a definition of triple. Yes.
So I know you mentioned Iris is one of the sort
Yes.
of ways that you evaluate companies. Do you also use things like the analytics or like the gears ratings for the companies as far as evaluating their impact?
No, we could, but we have just used the one that that we co-created with the Ford Foundation years ago, that all of our investors have so far been happy with. But I mean, there are others. That we
But
could
so you use that one mostly because you were familiar with it when you kind of started it.
Yes. Yes.
I don't know if you're going to get into this, but can you tell us a little bit about who your investment base is?
Yeah, no, happy to. Yeah, it is, in the first fund anyway, and it's evolving a little bit over time. The first fund was half money from banks who, under the Community Reinvestment Act, were motivated to invest in, actually, normally they invest in low-income housing. So investing in corporate equity, they consider risky. But they do qualify if these companies are in or near low and moderate income areas, as I described, case of Pandora. In California, there's another a government, not requirement, but incentive. The insurance commissioner encourages insurance companies that do business in California to do the same kind of thing, to invest in companies that serve low and moderate income communities. In addition, in the first fund, we had 4 or 5 foundations, and I think we probably won't have them this time because because it was from their PRI activity and they regarded it as sort of experimental. I'd be very happy to move to the corpus and have a larger investment, but that's surprisingly hard to do at most foundations, though I'm still trying. And high net worth family offices and the like. And that area has grown dramatically. It seems like frequently I run into financial advisors who say, our high net worth families want to do more in impact investing, so let's talk about it. Yes?
So I just want to push on the Pandora and maybe some of the other ones as well a little bit more. It seems like if you've got a 7.5x return, then clearly some of that money that came back to you as the impact investor could have been used to achieve a higher amount of social return instead of profit, right? So are you maximizing, it seems like you're maximizing profit for a given level of social return, rather than
I disagree.
maximizing social return for a level of profit.
I don't think that's at all a valid analysis.
Okay.
I think that a social return and a financial return can coexist, And I would say it's more likely, it's not guaranteed, but it's more likely that a high financial return will result in a high social return, because it probably means that the company has grown quite a bit. If the company's grown quite a bit, not only is it possible that it can employ more people, but it can do more things.
So you basically reject the idea that there's
I
a
do.
trade-off
I do.
between the two.
I do. Yes?
In Pandora's case, is there sort of like covenant, so to say, to make sure that they remain in that community, or because there's nothing to stop them from moving then into the San Francisco area once they get more money and they want to attract more talent, and people want to live and work in San Francisco versus downtown Oakland?
Yeah.
So how do you maintain that sort of impact over time?
Well, at this point, we have no ability whatsoever to maintain that because we're not investors in the company anymore. It's gone public. We sold our shares. When we make an investment, we do ask the company to sign a letter that says that they understand that we are an impact investment fund and we expect certain things of them. Now, we don't say you can never move from where you are. What we do say is, if you move, we would like to help you find a similar place. And normally they say, sure. Is that foolproof? Probably not. It's only 95% likely to work. But I think that's pretty good. Yes?
And so, sorry to sort of piggyback off of this. And maybe you'll cover this later, but are you early stage or late stage, and if earlier stage, so how do you sort of make sure that impact stays as the company grows, right? Does it take maybe 3 other rounds of financing and you were earlier?
Yeah, generally early to mid. And how do we make sure? Well, because the management team, but that could change, and the co-owners have committed by signing this letter to, generally speaking, abide by the principles of the fund. Does that mean that it's impossible that it could change? No, it doesn't mean it's impossible that it could change. But what I have found is, generally speaking, people are attracted to this. This is not a hard sale. This is something that they generally find, one, makes them more competitive. 2, makes them able to make more money because we work with public policy and not-for-profit organizations to benefit these companies. So they view it as additive, not necessarily just a social burden. And so that's why I've never run into that. I'm not saying it's impossible. It just hasn't happened. Yes?
So when you discussed your investor base, I thought it was interesting the fit between you and the investors is quite high.
Mm-hmm.
When you start looking at fiduciaries, pension funds, or how's the reaction been there?
I should have mentioned we did have one pension fund in the first fund, which was an employee retirement system from a local county. So I'm very hopeful we'll have CalPERS and STRS and maybe even New York State teachers. I think that those large pension funds either feel that there is enough support from their stakeholders that they should do a certain amount of this type of investing, or they're true believers and they don't think there's a trade-off and they think they can make more money this way. I don't know which. Okay. Thank you for the question. See, it's much better this way. So anyway, this just shows, I guess we've covered it. So I'm going to talk a little bit about this. Where do the companies come from? The due diligence, what is the expected financial return? Is a market rate of venture capital rate of return. No one knows what that is. It varies with, generally speaking, with vintage of funds. You probably know those that were started in 2000 were 0 to negative, and those that were started in the 60s were 40%, 70s, 30%. It generally went down to 0, and it's begun to come back. How do you approach the terms of an investment? I think the point here is what we've been talking about. Are there terms other than what a non-impact venture capitalist would require? And the answer is yes, that signed letter that we talked about. And I think the protection, if you will, against people cheating is that we try to find people who care about this as much as we do. And of course, if we succeed at that, we don't have to worry about it. Yes, we could certainly make a mistake like any other venture capitalist. What can the investor do to ensure that the impact models are successful? I'll cover that now. In the fund that we're currently raising, we have a public-private partnership with a group that's like Bull City Forward. If any of you have heard of Bull City Forward, in San Francisco, which is a little bit older and larger than Bull City Forward. It's 69 years old and made up of 278 companies in the Bay Area. It's essentially a public policy advocacy group. This is also coming up, so I should go faster. But the idea is to improve the community, not only for business, but for everyone in the community. And they will get part of our management fee and part of our carry, and their job is to help us implement the community engagement, the customized community engagement program for each company, in which we try to the extent possible, address the ideal of shared value, so that what they're doing in the community matches exactly what they're doing to make money. So there isn't dissonance there. And in addition, public policy advocacy for that company. And how do we realize, well, sell the company or take it public? Some people ask, what is the impact of your social lens? And some people think that means that you can't invest in lots of companies that don't meet your criteria. And that's true, of course. There's only a subset that we can invest in. However, because we want to invest in companies focused on resource efficiency, health and healthcare, and education and GovTech, as some call it, we're very happy with that universe. That's just fine. But the point that I want to make is I believe that we have come across two great investments, or certainly one great investment that no one else would invest in at the time, but a social impact fund like ours. And so when we found the entrepreneurs from Revolution Foods, and we invested in the company because we thought their social mission was very, very important, and that they could be successful financially, I think we wouldn't have done that but for being a social impact fund. So that worked out great. The first valuation that we paid there was $1.2 million post money, and the Revolution Growth Fund just invested at $210 million post money valuation. So the increase has been great. And in Powerlight, the point I want to make is it is a tri-sector leadership. In that case, the company was growing so rapidly that there were not enough installers to install their products. At the time, I was the director of the United Way, and we helped establish a program called Spark Point at Skyline College in the San Francisco Bay Area that trained solar systems installers. And we contributed some money to that. And SolarCity encouraged us to do that and needed someone to do that, so someone would train the installers. So it represented government, not-for-profit, and private sector working together. And in that case, it worked very, very well. We covered this. Generally speaking, the letter that we asked them to sign is embraced. And I'm told that millennials, including perhaps all of you, are much more motivated to work directly for social improvement than people in my generation. And I'm told, and I've read, that therefore this is something that you look for in companies that you might work for, is the equivalent of a letter that says, we try to serve the interests of all stakeholders, not only maximize short-term profitability. And I hope that's true, and to the extent that's true, it's a recruiting advantage for our portfolio companies. Well, I've already covered this, so I'm sorry. Keep going ahead. I think this tri-sector leadership point is just really very important. And connecting portfolio companies to local nonprofits, NGOs, and governments helps take advantage of beneficial public programs. Again, my argument, that's why you can make more money with this practice rather than less. Tesla is a good example, I think, of a company that clearly had a social as well as a financial mission and has accomplished both. I was arguing better than not-for-profits have accomplished even their singular mission. That may be unfair. The Environmental Defense Fund, the Nature Conservancy, and several others may in fact be more impactful. That's why we need better tools, so that we can try to figure out who has been more impactful, because I can't answer that question. But I do think that in the case of Tesla and Revolution Foods and several others, the premium that's built into their valuation is because of their particular brand of impact investment. And if they were to be, let's say if Tesla were to be acquired by, I guess it would be Apple, because GM and Ford and Chrysler can't afford them. So if it's Apple, I doubt that Apple would try to sell diesel-powered cars instead of electric-powered cars. I think that almost sounds ridiculous. But the point is that the premium is built in, and many people worry that if a company is acquired by another, then the social mission will be gutted. That certainly is not logical if the company is successful. Now, if the company is unsuccessful, it may go out of business anyway, to be sure. But if the company is successful and trading at a premium, no one's going to buy it and gut it, because that doesn't make any sense. I think that a couple of the issues here may be in defining impact. And so these are the ways that I define impact and that we define impact that I've talked about. I don't know if that's controversial to you or not. And the other thing that's very important to us is community engagement. And so these are some of the things that we try to do. In the case of Revolution Foods, for example, they're working as hard as they can to do local sourcing, even though that is more of an, certainly a managerial overhead. It's not necessarily more expensive done right. So they're working hard on that. Certainly LMI, job creation, and direct engagement community service. I told the Pandora story, but we do have similar stories of, for example, the employees from Powerlight volunteering in the community to promote the use of solar power, which they did when they were Powerlight.
I have a question. When you were looking at a potential investment, do you look for them hitting one of those three areas? Do you try to maximize them? Does it depend on what they're coming to you with? How do you think about them as criteria?
Well, we want as much as possible, but we're flexible, to be perfectly candid. If a company is likely to be a large entry-level employer, I would say that we're more flexible, because it's, in my experience, not in my experience, because that hasn't been a problem, but I think it will be a problem to continue to get venture capital rates of return and employ thousands of entry-level employees at the same time. So if we find a company that we think we can make good returns on that also employs lots of entry-level employees in an LMI, we'd be more flexible than in a software or biotech company where the employees are willing to teach STEM in the local public schools. I think that's easier to find than the former. Yes?
So in your response to that question, as well as what you said earlier about there being a good tool to sort of quantify this impact, do you have a rubric that you use in terms of making these investment decisions? I mean, I noticed when you were answering that question, you said we think a lot in terms of how you made those decisions. So is it based on sort of gut feel, like I think that we can trade off on the quality of healthcare, but because they're hiring so many, entry-level people? I mean, how do you do that? Is it all sort of your gut instinct? Or?
Well, I don't think there's an algorithm that one can use to make this decision, and I do think that investing is a key part of it is gut instinct. So, no, it's not all gut instinct, but I'm not embarrassed about saying there's some of that. Yes?
Yeah, for example, trying to take the community engagement part to maybe emerging markets or emerging countries, the LMI job creation part could be satisfied by almost any company over there, because if you establish, let's say, a manufacturing company in a developing country, you're going to create a lot of entry-level jobs. Would that comply, and could those companies be considered as also social investing available companies, or is it different in other economies?
Well, I think, from my perspective, it is a very important part of impact investing. It would not comply with our fund because the CRA rules apply mostly to domestic, well, exclusively to U.S. low and moderate income communities. That does not mean that the best companies don't serve a global market. They do. But certainly, at least initially, that money and the California so-called coin money from insurance companies is intended to benefit the local area. So yes and no. There's nothing wrong with it, but it doesn't fit our practice. Yes?
When deciding that a particular company has or organization has enough social impact, is it just you guys sitting around a table and saying that that's not? Is there ever a time when it's not enough impact?
Do you mean whether or not to make the investment?
Yeah, from the due diligence perspective.
We also consult with our not-for-profit partner, the Bay Area Council. But yes, it's the investment committee in consultation with the Bay Area Council.
So it's not, I wondered if it has to reach a certain number of people, or if there's any sort of metric for determining a baseline for impact.
Well, there is not a metric per company. There's a metric per portfolio, which I think, to me, is a practical approach to this, because not every company can score on every metric. But taken as a whole, I think we have made and can make a substantial social contribution.
Did any of your limited partners, like Ford, have come with metrics to you in the first fund?
Yes. Yeah, they're the ones who drove essentially the job creation numbers and living wage and healthcare for all and all things that we agreed with. But yes, they did. They were the principal architects.
And were you able to meet those numbers for them?
Oh, we exceeded by far.
Which is interesting because some of the, not that many students in here, but some students in here took the social entrepreneurship class that we taught last spring, where we looked at Northeast Ventures, which was another Ford PRI recipient who didn't make their numbers. So if you guys remember that case.
Yes.
Have all the companies exited the equity?
No, there are five or six left.
And I know you kind of touched on this, but how do you see them keeping their social impact after they've been acquired or bought by someone else?
Well, again, I don't think that's a problem, because I think most acquirers who are paying a premium, for the successful ones, they will pay a premium. They don't want to change it, and it's not worth paying the premium they're going to pay unless they like what they see. Of the other remaining companies, I would guess that some may fail, so that won't be an issue. And I don't know what will happen with the other two, let's say. They'll probably, merge with similar, sounds unkind, stagnant companies, and the shareholders will try to create some value, either by selling the merged companies to another larger company or something like that. Yes?
How active do you get with your investments, and have you ever been involved in a situation where you want to improve low-income jobs and probably increase their wages, but the entrepreneur or the founder just doesn't? So have you ever had that conflict?
How involved? So it ranges from very involved, which say on the board and very active committees, etc., to fairly passive. So the whole range. And we're willing to be fairly passive if we believe that the active people will do a good job of representing all of our values and helping grow the company. Half yes. And the answer is the timing of wage increases has been delayed in one case as a consequence of economic concern.
Just
yes.
one is kind of amazing.
Yeah. Well, it doesn't count the companies that failed, right? Where they don't have jobs anymore. Yeah.
So, have any of the portfolio investments you've made, are they controlled investments or are they all minority?
None are controlled investments.
Okay. So, if you're making minority investments, especially in the impact space, right? How many other investors have come along with you? What's the interaction been like to push forward that mission, given that absence or kind of esoteric measurement or rubric of impact and such?
Many, and I haven't found any who have objected in successful companies, because they're attracted to the companies, in part because of the way the companies are being run. So I've never experienced a conflict.
But like that definition of impact, right?
Yes.
The investment committee over here sits at the table, another investment committee sits at the table. Do you guys ever kind of get together and hash it out a little bit? Or, like, what's that interaction and relationship like?
So that would be a co-investor in our first round of involvement, right? So, because that's the only time that would occur.
Okay.
And so I'm trying to remember. It was easy in all the times that I can remember, which are the more successful companies. So in Revolution Foods, we were the only one. In SolarCity, we were the only outside investor. in Tesla. It was easy with Vantage Point. So there seems to be a perception that people don't like this. That's not true. That's not true. So, in my experience, that's not true. I'm sure you could find someone who will say that's true.
You mentioned trying to measure, like, for instance, how funds like this would do against nonprofits.
Yes.
Which requires like a certain amount of standardization of some of these metrics. But it seems like every company that comes along is going to have like an apples to orange comparison when you start to say like lunch and food versus an electric car. Is there ever going to be any hope, do you think, for like a standardized metric that could start to, look at much broader impacts? Which I'm totally fine with the way that it is now, but it just seems almost impossible.
I'm not the best person to answer that. I think maybe Kathy is a much better person to answer that than I am. I agree that it's
just didn't know
hard.
if you've seen anything so far that you're like,
I haven't.
this could happen.
I haven't. Yes.
I'm curious, you mentioned a little bit about some of the government regulations in California in particular that seem to make it easier to raise the capital. And I'm wondering how much of a role location and sort of these government regulations have played in the success of your fund. And I was actually thinking about when you mentioned Northeast Ventures, which I thought partially failed because it was in a really isolated area. And there's a lot of momentum in the Bay Area, and there's a lot of support. So do you think that's played a role?
Yes, I do. Now, the CRA thing, which is the biggest source that I talked about, is a nationwide rule, so that's not relevant. But absolutely, the rate of company formation in Silicon Valley, the highest anywhere in the country, is a huge help. So I've thought to myself, where else could this be done successfully in the U.S.? And I think it could be done in the Northeast. Maybe not exactly there, but I don't know exactly where there is. But certainly between Washington and Boston, the rate of company formation is very high. Possibly right around here, although I don't know enough about that. And also in Texas, I think it could be done. Yes?
How do you identify these companies? Is your firm well known and people are knocking on your door? Or do you have feelers out there and kind of trying to keep a pulse of the new companies that are being created you want to invest in?
So our firm is not very well known because it is essentially being restarted with the Bay Area Council. So no. But I suppose because of my personal activity, I know some people. And the Bay Area Council, of course, knows lots of people, has 278 members, business members. But the answer is there's no real magic to it. It is true. The better known one is, the more one would get. But it's essentially heavy networking. And another important point is consistent with my claim that people like this, is that when we meet with Silicon Valley-based investors who do not call themselves impact investors, we find that a lot of their activity I would call impact investing. So it's not a world apart. There's a significant overlap, and I would say, I mean, obviously there's an increased interest in this. There's particularly an increased interest in this among people who have money under management who are looking to make high rates of return, looking for good places to put it. Because these sectors are three of the best places to put it. Yes?
Just to piggyback onto that sort of idea, what advice might you have, I don't know if it's a question or maybe it's an ask of you,
Yes.
but all of us would like to find the next Pandora to jump aboard on, right?
Yes. Yeah,
And you
I would
clearly
too.
have had a lot of success with that. How would you advise us to do that? I mean, that's why we're here, I think.
Well, do you mean, so you're not asking how to become an impact investor?
No,
You're
if we want to take a functional role at Pandora, how is it that you're screening them and finding them successfully?
Okay, well, to me, the easiest way to talk about that, first of all, I think there are lots of them in this book, and the easy way to talk about that is another prop. I mean, I think that this platform is going to be very important in reducing the cost of healthcare delivery. And there are lots of companies working on that already. And, you know, if people certainly, first of all, who don't have a life-threatening emergency, stop going to the emergency room, already we would save billions of dollars. And then if people who don't have to go to the doctor don't go to the doctor but instead use this, we'd save more billions of dollars. And through accountability care organizations for self-insured companies, if we get better at identifying fraud in healthcare and better at identifying cost-effective, safe healthcare providers, then we'll save more billions of dollars. So, I mean, I think people are attracted to that. Another one that I have in this presentation is it's a company called IES. There is the leading geophysicist at Stanford and a recent business school graduate have started this company called IES, which is trying to create a standard, the equivalent of LEED certification for buildings, but this standard would be for oil and gas facilities, so that they would be certified as safe at a certain level, which would be very helpful, certainly because it would increase safety, first of all, but also would reduce their cost of capital as more money would be attracted to them, and their cost of insurance and other things like that. So I think that is a very promising area. And in this book, it talks a lot about Internet of Things. Sensors are almost free. Cloud computing is almost free. Gives rise, I think, to lots of opportunities. So, I certainly don't have any special method for doing that. But I do think that there are more than there ever have been of such opportunities. Thank you. Anyone else? Yes.
So you're raising money for your next fund?
Yes, and there is room for your investment.
I was wondering how different or similar it's going to be to your previous fund?
Almost the same, slightly broader.
Is it going to be bigger or smaller?
Slightly larger, 100 million instead of 75.
Okay.
But, because I want to raise the money, I think it should be easiest to do that if it represents only a small change from the last successful effort, which is why you see only a small change from the last successful effort. Okay. Well, I feel that we've covered this. And ratings, the fact that I said that we use a homegrown method, not quite homegrown, Ford Foundation devised method, doesn't mean that I have any less respect for IRIS or any other method that has been developed by third parties. Be happy to do so if that's what our investor base wants. But it is absolutely true that needs to be done, and no one should get away with just telling anecdotal stories about what their portfolio companies have done as adequate to constitute impact. This is sort of interesting. Maybe you're familiar with the controversy around the Google bus in the San Francisco Bay Area, which on the one hand is surprising because it's environmentally great to take all these cars off the road, but it's two objections. One, it creates a community apart because unlike, say, in Manhattan where everyone takes the same subway, if highly educated, highly compensated workers ride a private bus and others don't have that option, it creates separate communities, which is something that we would like to avoid and the Bay Area Council would like to avoid. And so, anyway, the reason I bring it up is the Bay Area Council did work with the mayor's office to compromise and get Google, LinkedIn, and others to pay a fee to the city for using the bus stops. So it's not like peace in the Middle East, but I think that it's a civic engagement to solve a problem that's causing dissension in the community. This is a fun story because when the CEO of Pandora was before Congress testifying, in front of him was Congresswoman Barbara Lee from Oakland, who was a very powerful member of Congress, and so they were talking about I think it was a royalty rate, and so she said to him, "Pandora, now wait a minute, are you the company that has employees that teach music in Oakland City schools?" And he said yes. And she said, "I think very highly of your company." So we appreciate that.
You said that several times.
I've said this, okay, sorry. And I've talked about this too. So I've already said this as well. To me, this is the hardest thing, which is generate, yes sir.
So a couple slides back, you mentioned sort of the impact and looking at sort of some of the different ways to impact socially. Diversity is obviously one of the big hot button topics in
Yes.
the company in the Bay Area.
Yes.
Is that something that's included in your impact, or is that something that...
Yes, it is. Yeah, we report on number of women and minority officers. Yes.
You mentioned the controversy on the bus stops. I also read a couple of maybe months ago, I don't know, some complaints about bus drivers being undercompensated. I don't know if it's Google or Facebook bus drivers being undercompensated, and they were driving all these people with high incomes and whatever. And the other maybe example could be Tesla getting all these government grants and being controversial. Do you think if these companies are committed either to social responsibility or impact, social impact, do they have a higher standard to living like on a holistic kind of values and being honest and transparent with the community and with their form of operating, or just satisfying the specific social impact they're trying to pursue, the example of Tesla environment?
Yeah. Well, I think in general, people who embrace this whole notion embrace most of what you've just said. I don't know anything about the bus driver issue, bus drivers being undercompensated relative to the people that drive it. I haven't even heard of that, but I don't dispute it. So I do think so. Yes, I think that the people that we invest in and co-invest with do have a holistic view of trying to improve society for everyone. I think that's one of the reasons they're attracted to this. Yes.
When you're evaluating a potential acquisition, is there a different time frame to evaluate a financial return than an impact social return? So, for example, you're saying you're doing a model and saying you're computing your financial returns as of 5 years. Is that same time frame similar to the impact you're looking for?
Honestly, I haven't thought about that, to be candid, because, for example, in the case of Pandora, I mentioned we have no ability to affect it now because it's public, we sold the stock, etc. So, I guess it's not in perpetuity. I can certainly say that. It's for the length of our involvement with the company. Any other questions? I want to make this point again. This is what's so great about this. First of all, you work with entrepreneurs, and you can try to improve society and work with entrepreneurs and make money and help design your own segment of the investing business at the same time. I don't imagine what could be better than that, actually. So I think you should do it. Yes?
I have a question on the second point in that last slide about it not existing outside of venture. I did some work looking at, on the public market side, whether environmental and social investing was an attractive active management strategy, and struggled to find evidence for it being that. What's your opinion on why it's better suited to venture than sort of public markets?
So I've heard anecdotally that, which is not good enough, we found that there is such evidence that ESG strategies increase returns. But anyway, leaving that aside, well, the difference, of course, is we're active, and it's quite easy to be active with these generally small companies with generally small collegial boards who work well together and like-minded entrepreneurs. So maybe that's the reason people think that there's dissension, is because in a lot of elements of society there is dissension. In this practice, there hasn't been. Yes?
So I think I would imagine most of us are sold on the idea of impact investing being a good thing, but it still remains sort of a smaller area and hard to break into. What would you recommend to sort of pass in there if we couldn't sort of attack it?
Yes. So I recommended this to Kathy earlier, and I think that the thing to do is to go to big pools of capital who I know are receiving pressure to do not necessarily impact investing, but to be more ESG oriented from the biggest providers of capital in the world. And so they're all, I think, a little bit more sensitive to this than they were 5 or 10 years ago. And to try hard to convince them that, first of all, based on your research, this is a very credible practice, if you believe that, and that you want to start a little area for them, which is in their interest, and you want to work with someone who already works there, who they already trust, to build that up. I'm not saying it's easy, but I think. But I think it's
kind of very easy way to say.
I think it's worth a try, particularly because
we do have some alumni doing just that.
Yeah, good.
But it's not. What else?
Yes.
Oh, so more on the positive side. What's exciting for you now? You know?
This is exciting. As I said, I love working with entrepreneurs. I think trying to, do what this book talks about, or trying to do what I talked about with this, or trying to, through certain applications of technology, improve public education in this country, which is horrible, or it's horrible in California. It's not horrible everywhere. Trying to cost reduce substance abuse programs, because we have such an acute substance abuse problem in this country, and it's very expensive currently to address, is exciting. I think all these things are exciting. Yes?
Do you think there's kind of an upper limit on the social problems that can be solved through impact investing and requiring a market rate of return on capital? And for people interested in solving those problems, what's kind of the next trench down you think we should focus on?
That's a very valid question. I don't know how to answer it. Yes, I do. I've often thought to myself, I know I couldn't do this if I had to manage $1 billion. So, but I don't know what it is. I think collectively one could manage billions of dollars doing this, but I often thought I can't, because I've described the way I feel comfortable doing it. Some problems can't be solved with for-profit companies. That is clear. But we do have a huge philanthropic sector working on those problems, as well as the government sector working on those problems. I think more problems can be solved with for-profit companies than are currently being addressed with for-profit companies. So that's why I'm, advocating this and believe that there's opportunity. I'm not sure that's a complete answer. It's the best I can do. Yes.
So when you were in your 20s or 30s, what were you wanting to do? And do you feel like at that time you were searching for this type of position and you finally found it? And what skills from those years of your life and those jobs do you use in your current role?
I was not aware of this and certainly wasn't thinking of it in my 20s. I was only in a very vague sense thinking I wanted to do something that was directly beneficial to society. So I was a banker for 20 years, and so I certainly developed financially related and later investment related skills, which I think are very important in what I do today. Yes?
You kind of highlighted that impact investing is already a credible practice in the financial markets. Millennials really want to work and be involved in it. It even has a lot of policy. So what do you think are some of what is the next challenge that impact investing is going to face? Should it be growing? Is it going to become mainstream?
Well, I think it should be growing. I think it'll be closer to mainstream. Yeah. The more it works, the more people will do it. And the more millennials become people who run organizations, the more it will happen, as long as millennials don't change their orientation in that regard. So I think it is a very bright future. Yes.
I mean, do you worry with that growth that it's going to be diluted by people who really don't have who really don't care as much as obviously you do about sort of having that impact? Do you feel like, if you had more firms, if you had 50 different firms, if you had 200 different firms, that sort of that actual impact would be lost, and we'd be back to sort of the same venture capital we have in the rest of the market?
I don't know. That's hard to answer because, for example, the CEO of Unilever, who's someone I've never met, but I certainly admire him from everything I've read. I think if every CEO managed their company the way he does, there'd be less need for impact investing. So, in a sense, mainstreaming is certainly a good thing. That's what I think is going to happen here. I don't think that it's not necessarily good that this be a practice apart. If everyone embraced it, that would be a victory. That wouldn't be a bad thing. And so, to some extent, I guess I think the CEO of Unilever, whom I've never met, does embrace this. Because I think what I read is that's where he's running his company.
Last question?
Just out of curiosity, venture capital is risky for itself, but what's the rate of success that you see in between investments that you do? Like investments that actually thrive and go to an IPO or you sell them, and investments that just like don't take them?
Yeah. Well, this fund I'm describing was in the top 10% of all funds, so the results were better. With I think it's seven IPOs or sales so far, with likely 2 more out of 18. So that's much higher than average. Most people say that you're likely to have 1 or 2 big wins and a few that sort of go sideways, as they say, and the rest fail. So you're absolutely right. This is very risky, and that's the kind of, I guess, result that people should expect.
Great.
Thank you all very much. I appreciate your time.
Before you guys leave, I just want to ask, can all the KSI 3 fellows raise their hands so I can see how many there are here? And then we have KSI 3 associates. All of you guys raise your hands. So most of the room are people engaged directly in this work.
All right.
Fantastic. Thanks, guys.
Thank you for being here.
All downhill from here.
So much fun. So much fun. I loved it. Thank you.
I am not going to get on here quick, figure out who the person is. Curious, what group or groups were you with over at JP?
That's a long story.
Yeah.
Because my very first job, I was in what was then called the Commercial Bank Management Training Program. And then it was Then I worked for the Place Unit of JP Morgan, which was the first manager of this.
Okay, got it. Yeah, oh, great. A bunch of us, myself, investment banking track. I came from a small PE fund down in Florida that kind of took me away as thinking about this. Because again, investors are asking the time of peace being well, so this is kind of I think that pride of the speaks but Bill, thanks again for coming all the way over here.
Hi, Richard.
Yeah, so a lot of the stuff, I was actually at Paperwork Capital in Oakland.
Oh, is that right?
So we had done a friend good. We're doing a sort of impact investing. So I'm actually, this is what I'm planning on doing. I'm doing environmental integration and then doing the business here. So this is looking at environment. So yeah, a lot of stuff shall come. I think this is stuff that he wants. Yeah, I mean, I could put it down. I'm telling you, I'll definitely take a look. Yeah. So this is my first. So I'm doing my first semester admin. So I'm considering what I'm going to do this summer. But I'll definitely take a look. Yeah, it's actually very interesting stuff, and I hadn't heard of it. And so it's nice to sort of have some of those trends. Right, all of them. Yeah.
So Paperwork Capital?
Yes.
Someone just joined them that I heard of.
Yeah, Lily from here. Well, no, Lily didn't join. She's from there, but
I knew Brian.
Yeah, Benjamin Jones.
Right, exactly.
Yeah.
So he's pretty high profile.
So we hung out. So he just joined basically to help invest in partnership. And so we did things like that on Twitter. But we basically got a good overview in terms of impact investing. That's why I was curious to know how other firms are doing it as far as it's a little easier for them because they are it's daily money. This is money. So you have to get correct. So it's like impact, yes, fine, check, But I'm just interested to know sort of more about how you guys do it as far as institutional investing. I actually sat down with SJ Venture.
I do know that.
I sat down with one of the folks Stephanie from actually earlier today to kind of understand their perspective as well. We're trying to figure it out.
I think they're great. I'm very friendly with one of their younger guys in San Francisco, Dan Jabal.
Okay, yeah. And because I think they have 2 in San Francisco.
Yeah, they do.
Okay, yeah.
They do.
Yeah, cool.
Yeah.
Well, yeah, thank you.
My pleasure.
Yeah, do you have a product place?
Yes, I do.
I'm here. So I'll be fully engaged. Next year. So I'll be fully engaged.
I can see you're fully engaged now.
Yeah, a little.
I have my eye on you.
It was something interesting.
Oh, very good. My pleasure. Take care.
So I probably relate to probably what you're There you go, no problem.
Are we going?
We're trying to raise, pursuing a search fund after our MBA, and we want to see what we think about position ourselves like infrastructure managers that want to acquire a company that could be and in such a way that create jobs, jobs.
What would the company do?
Are you familiar with this?
Yeah, but I mean, okay.
So what we're thinking is that, we both like the impact investments.
How are you?
We're thinking if it would make sense to position ourselves as sort of impact investors, social entrepreneurs, where we would buy a company in sort of this space. So we would focus on companies, on this type of company that we would buy, and then
You got it.
eventually
So
Sure.
the challenge.
But that means search funds to just do one investment, not to do multiple small investments.
Definitely.
Well, if that's what you want to do. I mean, to me, this is much more interesting, because I would rather be an investor than run a company. But if you want to run a company, sure.
Hey, we're willing to.
Yeah, the model is kind of.
I think that would be the next step.
Yeah, that would be the next step.
Well, that's fine.
Sure. It's a good way to solve this track record.
Yes.
Like issue, like
Yes.
first with the search fund,
Yes.
like.
Yeah, no,
And then to go in and solve, and then you can prove in some sort of way that you can be
Yes.
successful in managing a
Yes. Where do you guys go from?
Mexico.
Because the reason I ask is my colleague in the office has spent several years working in the financial community in Mexico City.
Cool.
And first of all, she loves it. That's what she really wants to do, is to work in Mexico City again. But the reason I mention it is because she says that there is an emerging startup mentality and practice in Mexico City. And that's one. And two, it seems to me what one of your unique skills are that you have, if you're not, you're multicultural, you at least have had experiences here and in Mexico. And I think being this is more interesting to me, being a conduit for funds, let's say funds from here to invest in Mexico, presumably a faster growth rate, lower valuation, riskier but higher opportunities. I would be interested in that. I'm not saying that what you're thinking of is not good. It is good. But I think it's there. And Chile, I mean, I understand Chile is just exploding with startups. We're going there next week is the reason I'm following up for business, which is the reason that's on my mind. But I might think about that. Now, I don't know much about what you did with, I don't know anything, or what you did before you came here, or what have you. But that could either be a really good fit or not a good fit, depending on your position.
How do we, help build more?
Definitely some investors feature more in the social world, some others.
Well,
just search more models.
well, that's right. But by the way, I think, I don't know Mexican investors, but I think there are many investors here who would like to make social investments in Mexico. I think there are. One of my favorite companies, I have not invested in it, but it's so interesting, it's called Consejo Sano. So Consejo Sano is a doctor helpline in Mexico City, staffed by doctors, serving mostly the employees of multinational companies in Mexico who are Spanish-speaking. So here's the opportunity. With the Affordable Care Act, there are more Spanish-speaking Americans who are getting health care. And so, again, a way to reduce costs is through the doctor helpline instead of face-to-face visit. And the helpline, first of all, the doctors in Mexico are more educated and cost less than the U.S.-based helpline. So using this Consejo Sano for Americans, Spanish-speaking Americans,
Cool.
Oh, that's gotta be.
So people living in America is calling doctors in Mexico.
Yeah,
Everybody's want to run a
Charge them a lot better than
But I actually know. Actually, I know a couple of companies that they do dental care, and they open a few units in Tijuana near the border, and they have Americans who come, or in Tijuana cheaper.
Actually, I know people who do that. Yes. I mean, customers. Yes.
So I really loved your talk because I mean, as you can see, there's a lot of people that were hesitant about the model and think that being an impact investor means you want to go out there and save the world and just make very much money and whatever.
Not true.
And I don't agree.
philanthropy and a lot of people think that they need philanthropic instead of making money.
Yes, I don't know why, except that's the historical way. Other than that, I don't see any explanation for it.
Yeah, there's no.
Do well enough.
I mean, they don't. There's no conflict between making money and.
That's the way I see it.
In the end, you can impact a lot more people.
Absolutely.
Yeah.
Yes, it is.
All right. Go ahead.
And how do you think about like the deal?
Guys, are you coming to dinner?
Yeah.
Let's go to dinner. and have
Okay.
lunch.
Perfect.
Excellent.
Over.
Can we have wine too?
Yes.
How are you guys going?
I'm driving him.
You want to ride?
Drive someone else too?
Oh, I do. I can drive you.
Do you have a car?
Yeah.
You gonna go first? What do you like? What car? I got room in my car. Only one car.
I can take you.
Right there.
Do you want to give me a ride?
Okay.
Want to return to
You want to ride in a little jalopy? Do you all need rides?
No, I can drive also. I'm parking the
Where are you going after?
The locks.
All right, I'll see you guys over there then.
Okay.
Where are you going?
Where did you park?
Park.